All right, people, welcome on the live. I'll get on straight away this time, as I know that when you guys are on the live, it doesn't even show me that you're on. So just go crack on anyway. But welcome all my YouTube people all around the world. I'm excited for today. Let's get straight to it with the dollar index. So, all right, guys. So if we go to what we've had today now, when I spoke to you guys yesterday, and I think the day before now, we're looking to see how the market reacts when it takes the high of the previous week, which was a definite. And when the price took the high of the week, we see that we come back down here in my little blue line, which is a supply order block here on the lower time frames, H1 and M30. Because we had unfilled efficiency here, what the market has simply done is using this validation point here, FVG, price has touched back into supply and taken off, which is a really beautiful signature. And that means that we're going to get some strength. Now, the strength coming into the dollar index, since it's not pulling back down here, it means that what the market really did do was to use this larger order block here for demand liquidity and go off for a long. Now the price has done this. To the left, all of these highs are beginning to be, or have already been taken. The last high over here, all of these highs here, so any liquidity above here has been taken. The next area that we're looking at is the supply order block here, and then our magical area here, which is our liquidity gap. So this liquidity gap that we've got going on, once the price fills this liquidity gap, now I want to see what the price is going to do. So I'm expecting another 68 pips on the dollar index, right? Now, the only way we're really going to know if the dollar index wants to go long is if it closes with the body of the candle above the high of last month. If it does that, then we're on our way for a long. There's no need to look back. But until then, we still have room to see what the price is going to do. Now, it is reacting to these highs slightly, but I do believe it's going to push up a bit further. Now, based on that price action, let's have a look at Euro USD. Now, Euro USD, guys, is doing what we wanted. It's gone into this area. Now it's starting to sell off with the GDP news that we've had going on. Now, I didn't take the highs here, which was an alternative because the price was lagging around here. So if I delete all of this really quickly right now, right over here, yep. So what I'm expecting the price to do is to pull back down here and then go for a long. So for that to happen, which is not too far away, I'm setting an alarm right here. Once the price takes this low is the weekly low, guys. And because we have unfulfilled efficiency, the price hasn't returned to the H1 or the H4 order block. And I just draw this here. Now, draw that here. Now, if you don't know why I've got a cross section, I'll explain quickly. So the H1 order block here, the price came very close to it, but didn't return inside of it. All right, this is the area here. You can see that there is a clear gap between the low and the return, but we've had price action moving on. Now, if you look at the strength or the ease of the selling pressure here compared to the buying pressure, there is still some bearishness left in the market, which is what was the expectation for Euro USD, right? So now that the price is doing this, as soon as it takes the low, I'll be looking for some longs, all right? Stop loss will be beneath the low, about 21 pips, and I'm looking to go for a long one more time. And this last long I'm looking for is just to take the highs of this previous month here at 110. So my target is basically 1.10960. After that, then I will know what the price wants to do. But until then, this is really the idea that I have for Euro USD. So I want you guys to be prepared because it's very much, it looks very clear that it's going to happen today. All right, now EuroCAD, which has been another pain in so many different ways, which is just, it's been absolutely annoying. All right, EuroCAD, I have to take off some of these markings, otherwise it's not going to make much sense. It's supposed to give us one more short. Now, the reason why it's supposed to give us one more short is very similar to why Euro USD, I'm looking for one more short. Maybe not at the same distances, but something similar to that. Now, what we've got here with EuroCAD is the price did take off long. And when it was going long last week, it took the low of last week and this low here. We had a bit of an accumulation here. The price was suppressed, and then we had the price take off long. Now, as it's taken off long, the initial target I had for a sell was in this area right here. We had a beautiful reaction here, type 2 stop on, as I call it. Price broke beneath, return here. So over here was where I was looking for a sell. And initially the price reacted really well. And it closed at the low of the previous 2 days beforehand, at the supply zone. And then continued going long and just started driving the price and took the high of last week and the week after that. Now, there's another inefficiency on the upside, which is what I'm waiting for the price to take. But it looks as though right now, Euro USD might actually, or I mean, EuroCAD might actually decide to go for a short. And I think this is where the annoyance is coming from me, because I already knew the price was going to go short. My idea really, which is what I gave to my students, was to go for a short and scroll here. From this point here, go for the price down here to the low, and then we go long. Okay. Now, I did a deeper breakdown on EuroCAD, and on Friday, I'll go through it with you guys again as to why I believe EuroCAD needs to go long one more time. But the long and short of it is we are in a bearish trend right now, and the price needs to get back up and run these highs, because these highs to the left here and this FVG on a monthly validation point hasn't been filled out. We actually have no return to this supply order block. So my thing is that where the price currently is, which at the moment is inside of this supply flip zone over here. Let's make this a little bit lighter so you can see it. The price has, let's zoom in here, broken above this zone, returned to the other side and given us major reactions of taking the lows or inductions here, which should give us another upside move to around about here before we go for a short. Now, if you see my other charts for Hugo's or for IC markets, then you know these two purple lines over here, and I know I have quite a few, but these bottom lines here, let me just make them blue instead. These lines here, the blue ones right over here, these two are liquidity gaps that have been left behind for a very long time that need to be filled. So I do expect the price to give us some sort of sell-off soon. So I'm looking at EuroCAD for a long, but before it does that, it needs to give us this price action here. Now, annoyingly, the price has come back to basically where it was when I took the entry up here. Okay, it really did stop me out. I did take a bit of a loss on this. And so I've kind of backed off from the market a little bit until I get the signature I wanted. Now, I had a choice between Euro USD and EuroCAD, and I chose EuroCAD. And now I regret it, because now I wish I chose Euro USD, because Euro USD didn't give us this same issue of pulling back further. It's actually done 110 pips so far. But you win some and you lose some, right? So anyway, with Euro USD and EuroCAD here. All right. Now I'm expecting the price to go for a short. Now with gold, okay, gold is definitely going to go for a long one more time. But I do think that gold is going to go towards filling the liquidity gap. All right, we've had a nice strong short going forward here. And that's because the dollar's strength is pushing up. And it looks as though that gold is going to approach this liquidity gap and take this low here. Now, if it doesn't fill out the complete gap and it starts to reverse, then that's okay. And I did say to you guys, if you remember my markings from yesterday, that gold breaks beneath here, it might get to the edge of the gap and then reverse a bit to fill the, come to the other side of this zone and then continue. All right, that's very likely for the price to do, okay? So we're staying wary of it. I wouldn't trade gold today right now, because I would like to see what the price is doing first before I go forward with that. All right, similar to this AUD USD, which has performed pretty well, it's given us quite a few shorts. Don't want to react to AUD USD yet until the price gives us further information. And then finally, we have USD CAD, which now that the price has done what we want, the weekly stop on long, all right, is broken past structures here that are important here. I'm expecting that USD CAD will probably go for a few more highs and then give us the pullback here that we need for what I would call a return to origin, and then we're going for an extreme long on USD CAD. So far the signatures have played out well. So the time when USD CAD is going to reverse the comeback for a short should be the same time that Euro USD is going to be going for the long. All right. Now the Euro USD, now the pairs are really pushing down short. I feel like I don't even want to bother chasing Euro CAD right now. But I feel like since it's annoyed me, let me just let it stay there. And when it takes the low, then I'll look for the other side of the market. But it was a really mad and crazy move that Euro CAD did. Yeah. So these are the pairs that I have in mind that I'm looking at. These are still the same pair. So Euro USD. Now Pound USD has had quite a bit of a diversion away from what I was expecting with Euro USD, which is fine. But I'm just gonna go to the daily to explain what I'm looking at. So first of all, on the monthly here, which is the main perspective to look at, there's a few things to keep in mind. We have this clear, okay, monthly FVG / monthly validation point over here. All right. We have, and I'm just gonna put this here, a really, really small supply order block over here that the price is still seeming to work with. All right. And at the moment, on the monthly, the move that gold has done has taken the high of the previous month, which can still trigger the price to sell off. Okay. So we should be aware of that, even though it looks like the price is going to go for a long. Now, on the other side of things here, this major weekly supply zone that the price was working with was broken above and returned to the other side. Now we have one weekly fair value gap here. We have a second one down here. And these two together equal to a range that we can use for observing possible long action, right? And when I do that and I go down to the daily, we have a daily order block right over here. We've had efficient price action right here, which is perfect. And then on the H4, if we were to map the same zone, then really the range that we're looking at is something like this. It's over here. So let's use another color. This kind of range here. So my thing is, if we were to take the top and bottom of this range, because the market left behind this weekly high, didn't take it. So the pound USD news just came back to take all the highs that started off in a week and then went short, which is fine. The optimal trade entry level is exactly at the beginning of the first weekly validation point, FVG, okay, on the weekly. And then the second one is within the H4/H1 order block area. So I'm actually probably gunning for the second one. That if we have the price getting here, then if we have any sort of reaction, it could be a weekly induction of the previous low or a daily induction, then we should be looking for another long one more time, okay? But as the price is just powering down, you know, pushing down so strongly short, same as pound, Japanese yen, and the rest, then we basically have a good range that we can work with to see what the price is going to do, okay? The price is really pushing right now, which is to be expected, all right? And EuroCAD is pushing down pretty strongly. I guess I feel pretty annoyed because I got done dirty by EuroCAD because I knew the price was going to sell off. I really did know, but it just decided to do it in its own way, which is not bad because it's just taken a weekly high, broken structure here, returned back to the order block, and then gone down. So stop loss should have been here and would have been going short right now. I just hate when the market does it like that. It's just annoying, but it's fine anyway. All right, so now that the price is pushing down here anyway, my concentration is on Euro USD to see what happens there. And then from there, we can, you know, grab a great trade. Okay. So these are the pairs that I have set up ready to go. All right, let's watch to see what EuroCAD does. If EuroCAD does pull all the way down here, guys, I'm personally not going to try to chase the short down. I'm just going to wait for it to get here and then look for a long. That's really the main trade I'm looking at. And if there's any other opportunity to do anything else, then I will. And of course, with Euro USD, same thing. Now, because, I mean, I don't know, I wouldn't consider this like a Euro correlation in a sense, even though they go in the same way right now. But I would just like to wait and see what EuroCAD has to offer, you know, as it goes along. Okay, same thing with gold. Now, it's pretty interesting to see what the market is going to do later on, because we haven't even reached 3 o'clock yet, and it's pretty heated right now in the market. So these are the only pairs that I'm going to be watching, and I'll give you guys an update. And if there's a need to go back live again, then I will. But until then, I just want to watch Euro USD and see what happens when it gets in here. All right. So I'll catch you guys later. That's the update for now. Be ready. We're almost there for the buy. Remember, entry will be in this H4, H1 cross range, which is 1.08391. Stop loss will be at 1.08417. And then from there, we're going for a long. All right. So this is it. All right. So I'll catch you guys.